Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hello and welcome to Closing Bell. Last hour to go. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema. With me are Surbhi and Prashant. And all their morning exuberance has faded now. Markets have given up close to 200 points from the top. The high today was nearly 25,000, 24,980. And as we speak, we're below 24,800. The bears are wresting control of the mid-cap index too. That's down close to about 0.5%. Very, very disappointing, right? Like, I mean, there's so much good news and this market just doesn't go up.
It's one of two things, Reema. Either the market is sensing something which we've still not discovered, or we have still not wrapped our heads around to it. And if you're someone who believes in the wisdom of the market, then is there a signal out there? Or the flip side of that could be, is the market just getting over-pessimistic? Is the market not able to move ahead of this issue about FPI selling or tariffs, etc., because if you look at it, I mean, whichever way you look at it, the numbers are big, the cuts are big, corporate commentary is strong, consumption is expected to revive, but yes, it's not showing up in the market. For some sectors like auto, for instance, you can still argue. The auto index was anyway up 9% over the last 1 odd month or so, roughly speaking 1 month. So there was a big build-up. It's still piled on more gains. But if you're looking at FMCG, for instance, I mean, you should have, or you would have expected a bigger reaction to come through, but that's not the case. And even in auto, pull up stocks like, that's FMCG. Let's pull up individual stocks to see the reaction. Pull up a Maruti. It's showing a little bit of red already. There are some consumer stocks out there like, Nestle, Trent. They're showing gains between 1% and 2%. But yes, we don't have big exuberance, across the board exuberance. Prashant is also with us. Prashant, so which one is it, you think? Is the market sensing something which we are not?
Which are the two options, Surbhi?
Either the market is sensing something that no one has figured out, and that's market wisdom, or the market is just over-pessimistic. It's just, it'll know better in due course.
I think it is number 3.
Oh, which one is that? I was waiting for it.
So this is, we discussed this in the morning, actually. Across sectors, right? This is basically pre-positioning.
Pre-positioning, yeah.
So I looked at, we don't know the graphics, but I'll say it. And we put this out in the morning. Nifty, from the 14th of August till yesterday's close, the Nifty Auto Index is up 6.8%, 7%.
True. Yeah.
Right, 14th August is right before the Prime Minister's speech. So since then, I mean, this has been building. So the auto index is up 1.25% off the highs, but it's up 7% till yesterday's close from the 14th. The consumer index, Nifty consumer index, is up 7%, 14th to yesterday's close. Metals are up 5%. Again, same date. FMCG is up 4%. So I think it's basically...
It's in the price.
It's in the price, or, I mean, it's not... Of course, I mean, nothing is ever priced in completely in one day, but the point is, there is a fair bit of pre-positioning, and I think that excitement does wear out, right? I mean, that, 11 o'clock at night excitement and then early rush, I mean, we're all... but eventually the market finds its own rhythm. But I think what we're seeing in terms of the cooling off, at least for now, seems to be a bit in terms of just sort of correcting some of the earlier pre-positioning that we really had. But there's enough single stocks which are moving around, and I think we'll focus on all of that as we talk about markets from here on. Let me just quickly get in Mitesh now to run us through what he's making of things. Mitesh, good to have you here. Good afternoon. So, so in the morning we put out this level. The recent correction was from the 21st of August high to the low on the 1st of September. The 61.8 retracement is 24,878 of this most recent fall. We took that out very convincingly, and now we're under it once again as we speak. Just levels you're watching, what averages you're watching, and what's the thing to do?
Yeah, so Prashant, good afternoon. One, I think broadly my view that markets will be range remains. Two, I think, while we got past this 24,870 level, we, had a pivot at 25,000, which was an intraday pivot historically, which is where, if you look at the markets, we made a high on the 31st of July and some other intraday highs were also there. So broadly, this is a market which is still contracting on the near-term or daily on the daily and the weekly charts, which means that you will see these kind of situations when rallies get sold into and declines get bought into. I would still believe that we are in for sideways activity, and in case we break yesterday's high, so we fill the gap, with which we opened today morning, which is around 24,730. Then we might head towards 24,400 again and test the lower end of the range. So as of now, it's a contracting market, trade with stock-specific bias. That is what I said in the morning, and that is the view which remains.
Mitesh, hi. Afternoon. Any stocks that you would trade?
Yeah. So Federal Bank is, something which is just breaking down. That's a negative setup over here. Would recommend taking a short call with a stop at about 192 for targets of around 183. And QV is something which has gone through a big correction. Could be a buy call here. Keep a stop below levels of 5130. Look for targets of 5250.
Okay. And Mitesh, let me throw two more stocks specifically at you, the two biggest Nifty winners, M&M and Bajaj Finance. They've already had a good run, but do you see more upsides?
See, M&M, the good thing over here is that the stock has broken into all-time highs, and that should keep the stock in good stead. Again, extremely overbought, so you might get a pullback, but I would not be surprised that eventually much higher highs are being made over here. M&M for me, buying opportunity would come around the levels of 3,400 in case we get it over there, which is roughly about 70-80 points lower. In case you get an entry over there, that will be a good entry point. Keep a stop below 3350, and I think we might actually see today's high of 3550 being tested and crossed.
Okay. All right. Thanks very much, Mitesh. We'll come back to you in just a bit. Gurmeet Chadha is with us to take us through this leg of the show. Gurmeet, what a day, and historic announcements coming through, right? Now, let's straight away distill this down to individual stocks. And let's start with auto. We're seeing the reaction, which is fairly diverse across Maruti. You can, again, that's the argument we were just having. Now it's a run-up already, 20% in the last 1 month or so. So is there more upside? Should you stick to a Mahindra? No, it's not like Mahindra and Mahindra has not run up. Look at M&M. It's been running up for the last 2 years. But how should one play it? Which part of auto, two-wheelers, four-wheelers, where do you see some durable upside?
So, my sense is auto will have a great quarter. So I spoke to at least 4 or 5 dealers since morning. In fact, what has happened is even for high-end cars, something like, let's say I spoke to a Toyota dealer, something like a Fortuner, the 28% GST and cess and compensation share effectively was around 50%. Now it's 40. So if you pick up let's say a Fortuner 4x2, which is 36 odd lakhs in, let's say, Chhattisgarh, let's say Korba or in some place in MP, that's now down like by almost 3.5 lakhs. In fact, one of the dealer told me they've got like 40 bookings of Fortuner since morning in Korba, for example. So I think what will happen is once you have more price lists coming, because, it will take a little time for system to put different codes. Autopods have this HS code, HMS code, which needs to be put. You'll get some prices, and I think that's where the bigger impact will come. So I think you'll see a lot of back-ended demand there. So I'm very constructive on M&M and Maruti, and including the OEMs, because also you have to see what has happened in last 2-3 years. Because the auto numbers have been pretty static. Similarly for two-wheelers. Now look at a Bajaj Auto, for example. It's been around 9,000 now for quite some period of time. So once the entire thing gets up, because 97% portfolio is below 350cc, right? So you will see some kind of impact coming in today. Today it's quite flattish. Valuations are reasonable. So I'm actually very constructive. I think I'll play both four-wheeler, two-wheeler, OEMs. M&M, again, you have almost 60% of the portfolio benefiting there, including tractors from 12 to 5. Even the above 1500cc cars will, I think, because the compensation cess goes away, so there is marginal improvement. And then you have Navratra starting from 22nd. So I'm very constructive. I think I'll probably add more to what I already have in the portfolio.
There's one more interesting pocket which is doing well, and that's these platform retailers like Electronics Mart and Aditya Vision. Both these stocks are up close to about 12 to 13%. We were chatting with Nilesh earlier, and we asked him that amongst which would be the top GST beneficiary, and he said the consumer appliances space, because on a price of 50,000, the cut in GST is quite sizable as compared to the savings on a biscuit packet. So then we asked him, like, what would you play then? Would it be a Blue Star? Would it be Voltas, Havells? And he said that his preferred pick would be one of these retailers of multi-brand products. So he didn't get into names, but there is Electronics Mart down south. That's up close to about 15%. The other one is Aditya Vision, which has about 150 stores up north and east. And these are stocks which are actually seeing a lot of interest. Gurmeet, do you have any of these stocks in your portfolio, or have you been looking at it?
So partially, I agree. You have platform players and retailers benefiting, but I also think there is a lot of subdued performance, even in some of the AC makers like Voltas or Blue Star. We had a very tepid season, which was the peak season, disrupted by rains and heat waves not being enough. Then you have something like Havells, which is across the appliances, electrical range, not only just restricted to, just the fan and the Voltas again has Beko and then the RAC market share being there. So I would prefer both, as I said. We have Havells and Voltas in our investment universe. We have Polycab, which is not necessarily exactly appliance play, but more a cable and wire play, and the FMEG, which is fast moving electrical goods, is 20%. I think one should also look at some of the appliance makers like Stovecrafts of the world, because that's also where you will see big rural demand coming in. And I think one thing which has surprised and will continue to surprise, is the resurgence in agri and rural demand. Obviously, some disruption in North floods. So I think that's another pocket one should not lose sight of.
You said Havells, and which is the other one?
We have Havells, we have Voltas, we have Polycab in our investment universe.
Got that. And Stovecraft, do you like, or
Yes,
do you own it?
We invested in Stovecraft.
Okay. What about another company like Bata? That's been an underperformer. And Bata is actually holding on to gains, 7%. Is it time to relook at it?
No, as I said, some of the plays can be tactical. So let's say something like a Bata, because footwear, there's been a price hike in terms of where the GST goes down. Similarly, apparel makers, similarly, some FMCG names. So, for example, Colgate, almost 100% portfolio gets the GST benefit. Something like a Nestle, probably maybe 50, 60, 65%. We'll see how it pans out. And then you have, let's say, for example, a BKG, which is probably 70, 80% processed foods. I think Britannia also, including biscuits, bread, everything, almost 80, 90% portfolio gets benefit. So I think some of the FMCG names, because there has been underperformance for a pretty long time, whether it is HUL, Nestle, Britannia's of the world, I think that is where you can look tactical. But I don't think so their valuations are that cheap that you want to hold them for a longer period of time.
Okay. By the way, love your example of the Fortuner, Gurmeet. It's happening, already happening. By the way, the market now is almost in the red. This is just about, it was up 200 points higher at the day's high, and it's completely flattened out. Just about 6 or 7 point change now. So 24,721 is where we are trading at this point in time. So, we were talking about this yesterday as well, but with the understanding that these announcements were only going to come after Friday. How it's going to be tricky next 2 days if you're trading, especially because of exactly this pre-positioning and specific stocks. There would be all kinds of expectations built in, right? And it's a big market out there, and different understanding on things, etc. So all of that, of course, now coming to, culminating with the announcements last night. Some are getting unwound, some getting built. So I think you should look at what you're seeing right now in terms of the change. And I don't think the market price action is a reflection of what the government has done yesterday. It's still long-term, very positive, very. It's great news, should have happened before. Maybe that's the only criticism you can do. But this is just, I think, some of the pre-positioning getting unbound in that sense. Gurmeet, when you join us, you always give us a few things you are working on, ideating on, meeting, and on your watch list. So tell us, Gurmeet.
So, one thing which stuck to me was this, DOMS I've been eyeing for a while, which is the children's stationery. And I think that space is really getting premiumized. People are now paying a premium to your pencil or sharpeners or eraser. And I think that's one very large segment where you're willing to pay a price, which wasn't the case when we were kids, probably. So that's something which we are tracking. I'm also looking at some of the beaten down names, which could be the second order impact. So you look at, for example, banks and financials. I don't think so, other than Bajaj. I think eventually, if everything does well, on consumption and even the private capex picks up, it will be on the bank balance sheet. So I think somewhere banks, especially the tier one banks, look oversold. And look at what SBI did on a fundraise, Prashant, a few weeks back. They almost raised money at 4.5%. On long dated bonds in dollar terms, which is in line with what some of the countries are raising, right, from after the triple B one. So I think really augurs well from a long term cost of funds and the way credit optics is going to shape up. So that's something we like. And we are looking at something, as I said, even on the export side, because that's where you get bargains, Prashant. So some textile names which have been rogered, something on IT, especially tier two IT, which they are trying to pivot, and it's a more IP driven business than purely tech services. So I think we are trying to position some part of the portfolio there, because my view is at some point of time, tariffs will also go. It may take few weeks or a couple of months. Nobody knows. Nobody has an handle. But the risk reward from a price point of view looks pretty favorable.
Okay, by the way, look at the Nifty now, barely 4 points up. So, yeah, the market for today, it looks like it could be giving up gains. We still have an hour to go before the day closes out. So, let's wait and watch. But the mid-cap index is down about 0.5%, and the Nifty is now virtually, it's lost all its gains from the morning. The gains were about 220 points when at the highest level in the morning. Since then, we have slipped quite a bit. The other disappointment, apart from IT for the market, also has been banking and big stocks like L&T and Reliance. A lot of the heavyweights, they have not let that exuberance continue too much on the auto side or on the consumer side. Gurmeet, finally, before we let you go on financials, and we were discussing this with Shriram Finance earlier, and we also heard it from Mr. Sanjeev Bajaj of Bajaj Finance. Bajaj Finserv. It should be good for lenders, but apart from Bajaj Finance, and we're seeing what that stock is doing, anything else that you will buy, hoping for better lending ahead?
Yeah, so we've added gold-based NBFCs. We've added Muthoot to the portfolio. We are looking at Chola also. Some of them better run. Geo Finance, again, it's a disruptor. The kind of yields they are offering on products like LAP, LAS, are actually as competitive as banks, because you get advantage of being a Reliance entity, and I think the lowest cost of funds amongst NBFCs. So I think, and plus obviously they're incubating a lot of businesses which will play out over the next couple of years. So that's something we are adding. And I also think at some point of time, if you have more money in the hand, not everything is spent. Some of it will get invested also. So I think capital market plays have I also call it as a consumption theme, because the way Gen Z is hooked on to new age investing. So I think even the capital market plays will be at some point of time will look good. There's been a lot of correction from where they were 20-30%, whether it is CDSL or CAMS or some of the other names.
Okay, Gurmeet, great conversation as always. Good to see you weigh in on markets and, of course, stuff that you like. We'll talk again. Thank you indeed.
Thank you.
All right, we'll take a quick commercial break here. We're going to come back. Our special coverage on the big GST bonanza continues on the other side. Stay tuned.
Welcome back. Holding on to the green line, but just by a smidge. Some stocks holding up are many of the pharma names. So Sun Pharma, Apollo Hospitals, Cipla. These are stocks where you are seeing some gains come through. But on the flip side, SBI Life, Bajaj Auto has now dipped into the red, and ICICI Bank is losing ground. Bajaj Finserv too was up close to about 3.5% at its peak. Now it's up only about 2%. Hormus is now here to talk about other stocks in the spotlight right now. Hormus.
Some interesting movers that have been doing the rounds in the broader markets today. And of course, there are names which are mostly linked to these GST rate cuts and rationalizations. Electronic Smart is the first one, 15% higher in today's session now. They've taken the gains to almost 20% now in the last two trading sessions. These are the highest volumes since the stock has seen since June of this year. And we have already had 6 crore shares change hands in today's session compared to a 20-day average of just under 8 lakh shares, and it is also convincingly broken above its 200-day moving average of 133. Although the stock is down around 30% from its peak, it's still up almost 2.5 times from its IPO price. The other one, of course, is Aditya Vision. Was in the news yesterday because of a block deal that took place. There was a promoter that sold stake. Motilal Oswal and Axis were some of the buyers there. And look at the volumes today. 80 lakh shares have already changed hands. Of course, yesterday's volumes were higher because of the block deal, but even today, 80 lakh shares have changed hands compared to a 20-day average of just 1.1 lakh shares. And with this move, the stock is also set to reverse the negative returns that it has had so far this year, which could have potentially become the first negative year for the stock since 2019. The other one is Atul Auto, and that is another one seeing double-digit gains today. 15% higher, the biggest single day gain since April that the stock has seen. But the volumes today are the highest since July of last year. We've already had 70 lakh shares change hands in Atul Auto. The 20-day average is only 54,000. So extremely high volumes seen on Atul Auto in today's session. It's broken above its 100-day moving average, and now that it's crossed the 500 mark, it is also above its 200-day moving average, which is at 492, but still down around 10 to 15% in 2025. And the last one on the list is Bata, of course, footwear names, but it was building up to this move over the last 5 days as well. So this makes it the 6th day of gains for Bata, up almost 17% in these 6 sessions. This is the longest winning stretch that the stock has had since April of 23, the highest volume since December of 24, and 27 lakh shares already traded today compared to a 20-day average of just around about 2 lakh shares. So in very firm grip is Bata.
Okay, all right, Hormas, got it. Thank you very much for all the buzzers of the day. Well, with that, let's move on and keep decoding the implications of these big GST reforms. Sunita Reddy, Managing Director at Apollo Hospitals, is now joining in. Ms. Reddy, thanks so much for being with us. It really is a big, big day, right? And I mean, for your sector as well, healthcare and pharmaceuticals, there's been a range of reductions, a lot of life-saving medicines. I think 33, I read the notification. 33 have seen a pretty significant price cut to 5%. Some of the life-saving drugs for cancer care, chronic care, I think some of them have come down to nil. And then a whole range of reductions on consumables, like I think, bandages, etc. So much, and medical devices as well. What would your first thoughts be? I mean, what does it mean for the business? How much of this can be passed on to customers? And how much perhaps will help improve margins even further?
I think the first part of it is, it's very important to understand that more than anything else, this is really stimulating demand, putting more cash in the hands of the consumer. This coupled with what was announced in the budget, which was reduction in taxation and therefore more disposable income in the hands of the consumer, has really spurred demand. If we were to look at it from a healthcare point of view, I think this will enable more people to have access to quality healthcare, and the significant incentive that has been given to insurance is clearly a huge differentiator. Moving to nil GST on life and health will enable more people to buy insurance products and for the insurance company to have a larger risk pool. So this should result in a huge access to healthcare, to hospitals, and the industry, I'm sure, welcomes it. The second most important thing is what you've said, that if you look at margins and you look at cost of consumption, etc., and something that is good for the patient, which is ultimately what we want. Life-saving drugs moving to zero from 12% is really something that is much needed in the healthcare sector. Balance all medication at 5%, definitely good for both margins and for the consumer. And moving on to think of the detailing in a way that they have done that includes reagents, diagnostics, consumables, bandages. All of this moving to 5% is a saving both in the hands of the consumer and for the hospitals. It should result in an improvement in margins. So the third most important aspect of it is what they've done for the construction. And I think that in healthcare, there are people who are consolidating hospitals, but what we really need is investment in healthcare infrastructure. So this will significantly reduce the cost of construction in terms of reducing the reduced cost on cement, fly ash, granite. These are important components of construction.
Absolutely. Yes, they're big
yes. So that will result in a saving. In about 2 to 3 days, I think I'll be able to quantify the savings and see the impact on the margin. But I must say that these are significant moves for the healthcare sector.
Absolutely. Ma'am, for things like consumables, gloves, etc., and even the drugs on which GST has been reduced, now that reduction, will it be passed on entirely to customers, or how does it work? I mean, overall, will there be a reduction in hospital bills, or it's too early to say? Some indication of how this might play out.
There'll be both. In the sense that we're at negative GST, so we were never passing on, even we were absorbing all GST. So I think, this, as we attempt to work with insurance and rationalize and create packages, this is a very important component of what could enable us to be more accessible to a larger pool of individuals.
Ma'am, on the insurance bit, it's true that 0% GST on premiums will make insurance on the whole more affordable, penetration will go up, but there is that other issue about income tax credit, ITC, where, you can't claim the income tax credit. Will that result, from a hospital point of view, can you explain what happens? And is that an issue for you as you work with insurers? Is there going to be some sort of an income tax leakage?
No, this is not going to significantly impact us, the income tax leakage. I think it's more in the hands of the consumer.
Overall, Ms. Reddy, which part of the healthcare industry will see the highest benefits? Is it going to be diagnostic chains? Would it be, the drug manufacturers? Or to what extent do hospitals benefit?
No, I think all across the value chain, you will see benefit. But I just want to end with something, we do not have input tax credit. So all of this in terms of, it's really not, from this, you will not see a huge impact on consumers currently. But as we rationalize input costs because of these savings, I think net we should be more affordable.
Ma'am, for critical treatments like cancer, etc., where medicines are now GST free, what could be the drop in patient bills?
It's at this time a little difficult to tell. Yeah. There's one which is radiation, there's part which is medical oncology and some surgical. But for medical oncology, of course, this is a huge benefit.
In terms of the input tax credit not being available, that's something that obviously the insurance industry is also grappling with to see how they will, deal with this whole situation of being exempt and not having ITC. Is there any ask from the hospital sector on the indirect taxation front now with these big changes having happened?
No, there will be an ask, and I think there's precedent, which is more important. If you look at what is done for education, I think that's a good starting point for us to,
Could you elaborate on that more
So
specifically?
if you look at education, the services are exempt from GST. For example, all of the contract services, the outsourcing is all exempt from GST, and this is a huge saving. So if we just follow that precedent, if we will continue to have a dialogue with the ministry to see if we can follow that in healthcare as well.
Okay. All right. Ms. Reddy, we'll leave it on that note. Thank you very much for joining in and giving us a quick perspective on what these GST changes and big cuts mean for the healthcare sector. Thanks for joining in. Well,
I have a fourth reason.
Of why the market's not excited. All right, go for it.
This is not mine. This is somebody sent it to me. I think this is it says now stock prices are quoting without GST. In the morning they were quoting with
GST. So the cut is leading to lower prices, but at least you've got some green back on the Nifty. But going back to the insurance space, I think that's the big hotbed where there's still a debate and discussion on what happens. Is it net positive for companies or not? Well, let's get Yash back in. I think we've got Yash with us. Yeah. Yash has been talking to, of course, a lot of the players since morning, looking at some clarifications that came in from New Delhi as well. Yash, what's the verdict as of now? No ITC at all. So what happens? Positive, negative?
Well, as far as the verdict on the premise itself is concerned, 4 important headlines. GST on individual life and health insurance exempted, GST exempted on the reinsurance cost, and to the point that you made in terms of clarifications which also came in. But what we had reported earlier before the clarifications even came in is that inverted duty structure, the benefits of it won't come to life insurance companies or health insurance companies. Also, the second part, input tax credit benefits won't come as far as life and general insurance companies is concerned, because the category of exempt does not have the provision of input tax credit itself. Now, let's look at the policyholder point of view. How much can the insurance policies get cheaper for the policyholder? Well, health insurance, if the entire benefit is passed on by the insurance companies, could get cheaper by 18% because the GST goes from 18% to the exempt category. For life insurance, the ULIP policy and the term policy, again, the premiums can come down by 18% if entire benefits are passed. Endowment policies could become cheaper by 4.5% because that's the GST rate there. And single premium annuity policy could become cheaper by about 1.8% because that is the GST rate which applies there. What happens to insurance companies? Well, the inference or the conclusion is that the cost for insurance companies on every policy is expected to go up. Why? First of all, input tax credit. To acquire a 100 rupees premium, insurance companies spend about 70 rupees as expense. Earlier, which is the current regime, they could take 18% GST input tax credit on that 70 rupees of expense, which won't happen now, and the ability of the insurer to offset that cost goes away. The second reason why the cost would go up for the insurer is no benefits of the inverted duty structure. Only reinsurance get exempted, which is just 1/3 of the total cost. 2/3 is still commission cost as well as claims cost, which still remain. And hence, that cost could come onto the books of the insurance company, both health insurance and life insurance. And the numbers that we've worked out and we've spoken to experts suggest that health insurance policies, the cost could increase for the insurer by about 5 to 7%. Life insurance policy, the cost could increase to the insurer by about 9 to 11%. There are 3 scenarios which pan out after that. Either that entire hit on health insurance of 5 to 7% and 9 to 11% for life insurance could come on the books of the insurer. Second thing, the cost could be shared between the distributor, someone like a Policy Bazaar, and the insurance company. And the third and the final scenario is that benefits could be curtailed. Some part of the benefits could be curtailed for the policyholder and some part of the benefit could be passed.
Well, that's exhaustive. Yash, thank you very much for that. And for a more detailed explanation, Yash, you're explaining it in detail on digital, right? On the digital platforms.
That's correct. I'm just ready to do that. So very soon you'll be able to find a detailed explanation on this entire math on the digital platforms of CNBC-TV18. Okay.
Well, be sure to check it out. Thanks very much, Yash, for that. Listening to some opinion we got, right? So we spoke to Sanjeev Bajaj. They run some of the largest life and general insurance businesses. Niva Bupa, a standalone health insurer, and of course, platform PB Fintech. Listen.
Some of the rationalization moves beyond the rate cut should just also help in formalizing, getting more MSMEs to come in, sign up under GST. So formalizing the economy as well. Even the operationalization of the GST appellate tribunal and simplification of structures should strengthen compliance and trust in the system and broaden the overall system. Any such dramatic change in the economy first impacts financial services disproportionately because it ends up supporting or enabling so much of the real economy. And that can work both ways. In this case, naturally, it is the positive step. So there is a hopeful positive move. I would directly look at both. On the consumer side, consumer spends should go up dramatically in the coming quarters. In addition, we have a large lending portfolio to MSMEs. That should benefit as well. You see, the benefit of that ability to set off input tax credit would have gone completely to the consumer. So from that point of view, if we had been able to do that with maybe putting this into the 5% slot, that would have benefited the end policyholder that much more. But we still think that it's a big step from where we were till 2 days ago. And maybe this is something to keep in our pockets for the next time this gets rationalized.
So it is not like one is making too much money or anything of that sort of profit. Terms like profiteering, etc. do not. Which insurance company is making crazy profits? And which distributor is making crazy profits? Right? As a percentage of premium. If the benefit is 18% and the cost is 5% or 10%, a benefit is going to the consumer, is it not? Right? Whatever the industry can afford, it will take.
We're not looking at anything which is, giving on to the customer. We want to give this to benefit to the customer. We don't want to increase premium as of now. We still want to assess this, understand this in terms of what impact it has.
Okay, that's insurers, right? And a whole range of views. And we'll play out sound bites of some of the top auto companies that we've spoken with. You heard from Mr. Bhargav, but so many others a little later. Pankaj Tibrewal is now joining us. He's founder and CIO at Ikigai Asset Manager. Pankaj, good afternoon. Great to have you with us here on the program. Thanks very much. It was going to happen. Now it's happened. Forget about what the market is doing now. It's come off a little bit, but into this event, maybe some sectors had rallied, etc. But to your mind, Pankaj, for the viewer, where does this show up in the biggest, where is the maximum bang for the buck, if I can put it that way? Which stocks, which sectors?
Prashant, good afternoon. I think consumption is something which we have been talking about. And I think directionally, if you look at all the last three events, first was the interest rate reduction. Second was followed by tax rate cuts. And now by the GST rationalization. All is moving towards reviving consumption at the ground level. And we looked at a lot of areas in this consumption because it's a large basket. That where is the maximum elasticity being played in the last 15, 20 years in India? Because we had various cycles across. And we saw that durables is something where is the maximum elasticity, and also autos. And if I take you back to 2008, if you remember, after the subprime crisis, government reduced 4% on excise duty. And it was for a limited period. And we saw about 20% CAGR growth across automobile sector in terms of elasticity, and the volumes went up. So clearly, I believe that in consumption. Clearly, if you look at from a GST perspective, rationalization, staples, yes, you will see some margin expansion playing out, but volume growth is not, we are sure that somebody will start using the toothpaste twice or thrice or 4 times a day because the price has been reduced. But elasticity in some of the other sectors like durables, autos, I think is clearly should be seen over a medium term. I think that's one. Second, our overall thought remains that commodities are in a very sweet spot. And I think this is a completely ignored and under-owned sector right now. And the developments which we are seeing globally has a bearing on this space. Don't forget, for the last 3-4 months, the anti-deflation policy which China has adopted is showing way that the excess capacities in many areas are being shut down or rationalized. And that means that a lot of commodity prices have started to move up. Look at coking coal, look at polysilicon, look at iron ore, and look at the Chinese steel prices. I don't know when I remember that Chinese steel prices landed in India is at a premium to the Indian domestic steel prices. At $520, China is selling FOB. So I believe that commodities is a sweet spot along with cement. And the third sector, which is chemicals, we have been talking about. We saw a worse downturn in the last 3 years, globally in the last 20 years. I think that cycle also starting to take a upturn. And we believe many bulk commodities where China has been a major player for the last decade or so, I think rationalization of that capacities will bode well for many of the Indian chemical manufacturers. So broadly, just out of, slightly out of box, though financials, tactical play on IT remains, consumer on discretionary. But these 3-4 sectors could be a decent one to look at as you move ahead from a medium-term perspective.
So within consumer, which space just to get some of the details out, Pankaj?
Yeah. So on consumer, our preference lies more towards discretionary, whether it be footwear, whether it be retailing, whether it be consumer durable, as we spoke about, and autos, if you include that, and also in consumption. And these are the 4-5 spaces, and you can choose the derivatives wherever you want comfort to be in. But these are the spaces where we believe that elasticity will be the maximum. And you just think about it. If you have saved a portion of your money from staples or any other category, you are likely to consume in low-ticket discretionary items. It could be maybe a pressure cooker. It may be something which you wanted from a low discretionary item purchase. And I think that's the space where we could see, which has been, out of flavor for the last 5-6 years. But I think there the demand boost can be significant as we move ahead.
Okay. Hi, Pankaj. Good to have you on the show today. So, I mean, in summary, let's say, if you are to look at the best, the sectors that will be, best impacted and where, there is still durable upside on stock prices. Now, autos have already run quite a bit. Then there is financials, broader financials. But then unless you are with a lender like, say, Bajaj Finance, no bank is exclusively lending only to consumer per se. So then what's the best play over the next few months?
That's what, Survi, I said that maybe autos may have run up. But we haven't seen volume growth in two-wheelers and four-wheelers for a long period of time. The two-wheeler volumes are still below the pre-COVID levels. And I believe that once that monthly numbers start to show some growth, I think markets could get a bit excited on those names. And obviously, then there is an entire auto ancillary play below that, which has not moved to that extent as we speak. And I think that's something which which could be an interesting play as you move ahead.
But you're saying so more optimistic on two-wheelers than
four-wheelers, both. I think both of them are good.
Okay.
And auto ancillaries along with that, which kind of favors that. And also consumer discretionary, I mentioned, Prashant, a lot of sectors where after saving, you will like to spend on those consumer low-ticket purchases. I think that's another area where we are positive on. And the third, and the three sectors where I mentioned, which is metals, cement, and chemicals. I think there the macro thought is that globally inflation will be back in action very significantly. As countries build out their infrastructure, their factories, you need metals. And overnight, you can't open a mine. For example, US, if you look at, in the last 15 years, copper production has halved. And now for everything on electrification and other things, you need copper. Where will you get copper from? So there will be a demand-supply imbalance in many commodities as you move ahead in the next 3-5 years. And China is shutting down excess capacities in the last 4-5 months, whatever action the government is taking. And I think that bodes well for the overall commodities, cement and chemicals.
Okay, so I think we've done a fair amount of discussion on individual sectors. Before we let you go, Very quickly, overall, the market, Pankaj, of course, individual stocks are moving and it has been a stock-specific market. But at an index level, the struggle continues. Do you see that changing maybe as we get into the festive season?
Maybe in the near term, market may remain sideways, Surbhi, but I am not so negative on the markets. I was at the conference at last 2 weeks at various conferences, meeting a lot of my counterparts globally, locally. I think the mood is of pessimism today. But when I look at the rate of incremental change across, I think it is only going to be positive rather than negative. Whether it be earnings starting December quarter, you will see a rate of change being higher than what we have seen in the previous quarters. Whether it be on the tariff issue, I think the move could be positive rather than negative. And from reform perspective, and don't forget, India works when there is crisis, and government is doing all the right steps, starting with GST rationalization. And we expect that more reforms should follow over the next couple of months. So the rate of change, which I think is very important in the marketplace, is going to be positive. And hence my belief is for the near term, markets may consolidate sideways. But once earnings from December quarter onwards starts to come in, I think markets can start to move northwards from there. So I'm not so negative on overall market per se. And you know that we were cautious till Feb, March, then our view changed. And from here on also, I think stock-specific movements will be there. Easy money is behind us. Let's be clear. The fest which we saw for the last 4-5 years is not going to be there. It will be a stock pickers market, but from December onwards, I think index should also start seeing to move higher.
Absolutely. Pankaj, thanks very much. Good speaking with you. It's always a pleasure to get that sort of framework and how you're thinking about markets from here. We take a quick commercial break here. What are the buy and sell ideas in the short term? Our technical experts will be joining in for exactly that. And of course, we're going to come back and tell you the market buzz on D Street Chatter. Stay tuned.
Welcome back. It's a bit of a damn squib in terms of a close now. We've got about 30 minutes left and the Nifty is at 24,750. But let's find out what the F&O cues are. Manglam's at the F&O desk. Manglam.
Well, the markets are off the highs, and that's something that we can see. The Nifty Bank, and more pronounced decline is that what we've seen in the mid-cap end of things. Over the last few trading sessions, the mid-caps were actually doing a lot better. But today, after I think 3 or 4 trading sessions, we have more decliners than advances in our market. So in the broader markets, if you look at it, 0.2% lower for the mid-cap index and way more number of stocks which are declining versus the number of stocks which are advancing. That's the crisscross lines which are suggesting right now. But what's interesting is the bunch of levels that we have to watch out for. Today's high on the Nifty, 24,981, absolutely in line with the 50-day moving average, which was at 24,979. So that's where we found resistance. Thereafter, we went all the way lower to closer to 24,700, and we found some sort of support at the 20-day moving average, which was 24,695. And where we're at right now is the 100-day moving average, 24,750. So staying above 20 and 100-day moving average would be extremely crucial for us to go ahead and conquer higher levels, which were closer to 25,000. Top gainers in the cash market include some of these electronic sellers. So we have Electronic Marts India and Aditya Vision, both of them doing extremely well. But psychologically, the 25,000 mark on the Nifty seems to be a bit of a resistance. That's what call writers who are, betting on expiry for the next Tuesday are placing their bets on. 25,000 call has seen a fair amount of writing, premium of 180 rupees. 24,900 call as well is equally active, equating with today's high. So between today's high and 25,000, there could be some supply coming in. But at lower levels, there is support, which is why the 24,800 put writers are equally active as well. Between 24,750 to 24,700 is where support is seen for the market. So a lot of long positions added on names like M&M, Britannia, Colgate. Basically, the ones that stand to benefit from the GST rate cuts are the ones which are fairly well bid in today's trading session.
All right, Mangalam, thank you very much for that. That's the F&O stat as things stand right now. Mitesh is back with us. Mitesh, welcome back. How are you looking at things? I mean, still there, right? It's kind of fizzled out a little bit, just 20 points. What are the trades?
Prashant, I think on the stock side, I have what one buy and one sell. Info Edge is turning negative. All the intraday charts are, seeing negative crossovers. So STVT here. Keep a stop at 1345, look for targets of 1310. And on the positive side is Jubilant Foods. That started the day where it's come off the day's high, but I think the overall setup is still on the positive side. So would suggest a BTST with a stop below 649.5 for targets of 665.
Okay, Jubilant Food, right, is the call. By the way, market breadth is completely turned around, right? If you want to just, Mitesh, I want to just ask you 2 or 3 these names. Ola Electric, if you can put out, it's down 6%. Of course, it's up 50% in the last 1 month or so. But Ola, on the way up, used to have the biggest volumes, and the way down has got the biggest volumes. Paytm is down about 4%, but it's also had a bit of a one-way move recently. I mean, Force Motors, I guess don't even ask. It's even after today's pullback, it's up 180% this year, 2025. But it's down 8.5%, meaningful cut today. Garden Reach is down 4%. JSW Cement is down 4%. That's, of course, the recent listing. TBO Tech saw a massive move. They announced an acquisition. Stocks at the same price where it listed a couple of months back. TBO Tech is down 4%. Delta Corp, I mean, some of these are just pure reversals. Delta was up. It ended for some reason 12-13% higher. It is down 8% right now. 87-88 rupees on Delta Corp. Bajaj Consumer is down about 4%. Oswal Pumps is down 4%. Again, a recent listing. Zuari, there is Renuka Sugar. Idea Forge is down 4%. And so on and so forth at this point in time. 1,800 stocks are lower. And you got about 1,230 stocks which are higher at this point in time. So it's basically flipped along with the rest of the market that we've been reporting. Let me now actually toss it across to my colleague Shireen, who's with a special guest. Shireen, over to you.
Well, thanks very much, guys. As we continue our conversations on the new GST regime, joining us now is Rajiv Memani, the president of the CII, also the chairman of EY India. Mr. Memani, always a pleasure. Many, many thanks for joining us here on CNBC-TV18. I know you're traveling, so appreciate you taking time out to be with us. The day that you took over, this is the conversation that you and I had. Are we ready to usher in a new GST? And it certainly seems to be now a reality. Your first reactions on what the implications and the impact will be for the economy in the near term, but more so in the medium to long term?
Yeah, I think, Shireen, thank you for inviting. Always a pleasure talking. No, I think, listen, this is probably something the industry has been talking about for a long time. We had the corporate tax reduction, which was quite significant. Then we had some personal tax relief in the recent budget. And, the industry felt that the full consumer uplift is not coming, especially in sectors relating to FMCG, food, and urban demand in particular was slowing down. So there was a lot of requests to see if there could be GST rationalization that happens, and some GST rates are reduced. The second was obviously because of the four rate structure, there were always classification issues and things like that. So that was also creating confusion. Then we had lots of inverted duty structures. So GST has been one of the best reforms that India has done, but it needed another refresh. And honestly, the speed at which the government has done it and the intensity with which they have done it, and even the rate structures that they have devised, not only just reducing rates for a lot of these items, but also corrected inverted duty structures, also ensured registration had become easier, also ensuring that provisional credit for inverted duty structures was available. So at least refund process can be speeded up to a large extent. For e-commerce companies in particular, registrations for the sellers, resellers, registrations, just at one place and not multiple registrations. So I think this is not only from a rate standpoint, does it give great impetus to the economy, but also structurally, I think it's something that they've tried to address quite a few things challenges that people have been experiencing. I think this will have a very positive impact on the economy for two reasons. One, I think the Prime Minister on 15th August, when he announced this and he also talked about this is the time for India to reform and all kinds of reforms. So I think hopefully this is the first one in a sequence of reforms that one sees, which definitely augurs very well for economy, for GDP growth, and for the overall strength and resilience of India. So I think in that way, it's very positive. And secondly, obviously, the economic impact. I don't know, we've not done the exact number, but my guess is roughly 1 lakh crore odd would come in the hands of consumers to spend incremental amount of money. And that's a big relief that the government has given. And, this is a virtuous cycle. You have greater sales, you have better capacity utilization, you have got greater capex spend. So the multiplier impact of this will be quite significant. So I'm very positive that the changes will come through. By when will it come through, Shireen? I think it will obviously 22nd September is when they're saying by the time things actually start. And this is at the perfect time because this is the prime time as far as consumer buying is concerned. And as things progress and there are some issues as the inventory clean out happens, inverted credit gets clearer. The pricing, it's very important for industry to ensure that the pricing advantage passes to the consumer. And as soon as that happens, the benefits should start trickling in. So I think any time in the last quarter of this calendar year to early next year, we should see benefit coming through.
Yes, several points that you mentioned there. But, Rajiv, if I were to pick up on what you mentioned, and we've sort of started to see this theme play itself out, starting the budget with the income tax cuts coming in, now with the GST cuts announced by the GST Council. Consumption seems to be something that the government is focused on. To take forward that sequence of reforms theory that you were building on, if consumption is in fact now being prioritized, what could then be the next set of reforms? What has been the discussion and the dialogue between industry and government on what could perhaps spur consumption further?
Yeah, I would say the government has definitely, obviously it also addresses a large part of India, which feels that, they don't have enough money in their hands to spend. And as you have seen, Shireen, the revenue neutral rate that has come will be below 10%. So you have low corporate tax rate, you have low revenue neutral rate, you have some relief on the personal tax side. So I think that piece of the equation is honestly, yes, you can continue to ask for some procedural ease and some other things here or there. But I would say that part of the equation has been very well taken care of. In terms of next set of reforms, which will create, if you look at government's agenda is to create greater economic activity in India, ensure that India is more self-reliant than it ever was before. That if you look at those two themes, which means to encourage greater business activity in India, on doing business, I'll break this into three parts. On ease of doing business, as you know, Shireen, there has been a lot of work that is happening. It is being led by the highest levels in the government. They're engaging both with the central governments and with the state governments. They're seeking active feedback from the industry. They have also got a team of people who are benchmarking each states on various approvals, consents that are required, whether it's for land, for labor, for environment, for NOCs and others. And hopefully we see, and we are seeing some early signs, and hopefully we see signs of implementation of that. Some of them have to happen at a central level, and a lot of them have to happen at the state level. So hopefully the willing states and who really care for greater economic activity in their state should be the first ones to adopt some of these changes, because it will make them significantly more attractive and competitive. The second, after ease of doing business, is factor reforms, which will really lead to reducing the cost of doing business. And there I would say land, labor, power, logistics, these are some of the important ones which the government is focused on. If I have to pick up one or two, I would say power is one area where there is a lot that can be done. And especially if we are looking at bold reforms, then the industry has definitely made the point of, we have to reduce the power cost for industry. You cannot have a 50-60% cross-subsidization load as it is in some very progressive states. And the only way out of this is either to encourage privatization in states, or to look at issuing second licenses. And over a period of time, reducing the cross-subsidization, at least for manufacturing. And I think that will have a big impact on the power competitiveness. Also, how we facilitate captives and ensuring that captives also don't have to incur that load. Because once the tariff barriers come down, as they will come down.
Okay, that's a view from EY. We also spoke with Shailesh Chandra, president of SIAM, the Automotive Association. Here's what he had to say about the GST reforms.
For auto sector specifically, we are seeing across the categories, there has been a significant reduction in GST. The 28 to 31% bracket rates have come down to 18%, and then 43% to 50% brackets have been brought down to 40%. So I think not only the reduction, but also the timing is perfect, just ahead of the festive period. And therefore, I believe that this will have a significant impact on the demand, which will be extremely favorable. So overall, I think, it's a significant move, and this will have a significant demand creation and generation for the auto industry in all the categories. I'm sure that, it will be much better than that. But what will be the real size of this increase is something which, among all the members in SIAM, we'll try to size this increase in the coming weeks. And then I'll be in a better position to really say to what extent the demand will increase. But definitely from the earlier projection, things should be much better.
Okay, that's the opinion coming in on GST landmark reforms, but the market doesn't seem very excited. The mid-cap index is extending its loss, now down nearly 450 points. Let's find out actually what the mood is across dealing rooms and why we're seeing such a subdued reaction to these policy positives. Nimesh is now joining in with an insight. Nimesh.
Hi, Rimana. So first, to talk about your point of why the market is a bit disappointed, I spoke to a lot of investors today, and the feedback seems to be that 90% of what was announced last evening was something which was anticipated by the market. So market was more looking for, where the disappointment seems to be, or which was not a big surprise for them. So there were really few pockets where either there was a big surprise on the upside or a bit of disappointment. So I guess that's the reason why you're seeing a bit of profit booking in the FMCG names. And in general, there has been a profit booking is what I sense in the FMCG basket. And even in the FMCG basket, Rima, the feedback seems to be that, it's not going to be easy to gauge as to which, segment will do well in the very near term because of this GST rate cut. So it's a huge market. It's a complex market, right? So it's not very easy for anybody to get a sense on which FMCG companies or which segment should do well. So that's the overall feedback from what I understood, talking to a lot of investors about the GST rate cut and the potential impact. Overall, from a market's point of view, a bit of profit booking, I would say, and in general, we've seen a bit of selling pressure from the larger FIs. So that's been the trend in today's market as well. But it's the insurance leg or the domestic leg which is still putting in money, and that money seems to be flowing into some select pockets. But I guess today's GST story and the FMCG story seems to be a bit of profit booking, and because there was a bit of anticipation which was there in the market that these are the things which are likely to come. So I would say more of profit booking than anything else, especially for the FMCG basket.
Yeah, no, absolutely. Seems to be the case. Nimesh, in terms of individual names, what's on the radar? What are you picking up?
So, okay. So in terms of individual stocks, Prashant, the first stock is Prime Focus. That's been, been buzzing in the last few weeks. In fact, there was a large block 2-3 weeks back, and since then you've seen a bit of re-rating. Now I understand there could be another large block deal in Prime Focus very soon. So that's a big buzz as far as Prime Focus is concerned. The second stock is Indus Tower. This is interesting. While the stock is corrected sharply on that reports of or on the board prima facie approval of going to the Africa market, some smart investors, including mutual funds, one or two large family offices, they have actually bought in the last 2 days of dip into Indus Tower. And again, the biggest concern for the investors has been the deferment of dividends. So in case there is some clarity on that, maybe you see a bit of reaction. But there has been genuine buying on the downside by some mutual funds and market investors in Indus Tower. The third name is Tega Industries. It was part of my charter list a month back or so, and stock has seen a bit of reaction as well in the last few days and weeks. I understand there is a very large corporate development which is down the corner, and the feedback is that maybe you'll get to see that announcement coming very soon in Tega Industries. So that's the news there. And the last one is Axis Kids. Again, a mid-cap name, but been consolidating in a very narrow range post Q1 numbers. But now even in Axis Kids, there is an indication that maybe you'll hear a corporate development. A potential joint venture with the Middle East company is the buzz as far as Axis Kids is concerned.
Nimesh, on Prime Focus, I think there was Standard Chartered which held a large chunk for a long time. I'm not sure, it is that block which is now getting transferred. Is it that chunk?
There was one large block where Standard Chartered was a large seller there. But I understand even beyond that, there is one large FI investor who could be a potential seller. So that block can come, is the sense as far as the market feedback on Prime Focus is concerned.
Okay. All right. I have more questions, but no time. So maybe later. Thanks very much, Nimesh, for that. That's an interesting list. We'll take a quick commercial break here. More market conversation on the other side. Ambarish joins us. 9 minutes to close.
Welcome back. Just counting down to close. Ambrish Baliga is joining us on the last leg of this show and the hour. Ambrish, did you make any purchases today? What would be your best big GST bet?
One big bet is Mrs. Bector's food specialty because they are one of the biggest beneficiaries of this GST reduction. Basically into biscuits and bakery products, flagship brands like Cremica and English Oven, decently large range of products. In North America, North India, they are number 2 in mid-premium and premium biscuit segment. And West and South, they are increasing footprint. In East, Kolkata, they are setting up a new facility, so Eastern market should also pick up for them. Health-focused offerings are also gaining traction. And when we talk of QSRs like McDonald's, they are the exclusive suppliers of buns to them. And they also supply to Subway, Burger King, as well as KFC. For Cadbury's, they manufacture Oreo biscuits and Choco Bakes. And from an export perspective, one of the leading exporters in biscuits, 12% of the total biscuit exports from India is from Mrs. Bector's. Dubai, again, they have a subsidiary which is building the base for the GCC region, which again is a very large market. So overall, I think we should see consistent growth if we talk about the next 2 to 3 years. So expected EPS for FY27 is 32, and my target price is 1760. But the stock has moved up quite sharply today, so I think one can buy at these levels partially and then wait for a correction to buy more.
One stock which is spiking right now is Eternal. We know QSRs would, there is broadly a lower rate on dining and takeaway, but I think the way to play it is Eternal, the platform play. Look at Eternal spiking up towards the close of trade. But on the flip side, Dr. Reddy's, HUL, Nestle are just seeing some more profit booking as we wind down today's trading session. So Mrs. Bector's is one. Anything else in the textiles, in the footwear space that you like?
Footwear, again, Bata has moved up today decently well, but then if you look at the products, I don't know how much real benefit they'll get because they don't have too many products at the lower end. So again, Bata, if it moves up because of this, could be a good profit booking opportunity. And as far as FMCG is concerned, still bullish on stocks like HUL, Dabur, even something like a ITC. Because if you see, cigarettes is a status quo for a while longer, and then finally when the 40% GST kicks in for cigarettes, it will be lower than what they're actually paying as of now, which is close to about 54-55%.
Okay, all right, Amrish. Well, thank you very much for all the inputs today. We are down to the last 2 minutes of today's trading action, so let's quickly wrap this up. It's been a historic day in terms of the reforms for the market, though it could have been any other session, because final count, Nifty is going to go home with just a 20-point gain. So what was a 220-point gap up in the morning ends with just about a 20-point up move. The mid-cap index is negative. It's down about 0.6%, and the advanced decline ratio is also negative. As you can see there, there are over 2,000, on the BSE that is, over 2,400 stocks declining on the NSE. Over 1,700 stocks on the declining side. Anyway, let's talk about what was green on the large cap screen. Mahindra & Mahindra retaining a bulk of that morning pop, 6% up. Bajaj Finance, 4.2% higher. Apollo Hospitals, 2% up. Bajaj Finserv, 2%. And then a bunch of FMCG names, Nestle, ITC, on the consumer side, even Trent, Eternal, some names over here. But after that, the move fizzles out. Actually, the Nifty's gains were retained thanks to 2 big banks, HDFC Bank and ICICI Bank, both on the green side. Otherwise, maybe we would have lost that little bit of green. On the flip side, HDFC Life finally is ending with a cut of about 3%. Remember, they don't have input tax credit. It's become very, very clear. Maruti, perhaps stock had already run up, so today was a day of profit taking, 2% lower. And then you had the biggies, Infosys, Reliance, stocks like L&T. They didn't really contribute, leading to what was not a lackluster close as we're getting to the bell.
Well, the mid-cap index ends with a cut of more than 350 points. On the way down, you had Delta, Ola Electric came in for profit booking. JSW Cement ends with a cut of nearly about 4%. One MobiKwik again, a big mover. Earlier this week, the stock is up nearly about 30% over the last 3 trading sessions. Today, a bit subdued in trade. And even stocks which were beneficiaries of the GST cut, like a Campus Activewear, came under pressure and ends with a cut. Other insurance names like ICICI Pru weak in trade. On the way up, Bata, Aditya Birla Fashion, Avenue Supermart, Electronic Smart, NetWeb, Atul Auto. These are some stocks which stand out in terms of the gains.
Okay, I think we are done for the day, right? The well went off. 24,740 is where we finally closed, which is about 25 odd points higher. So, yeah, I mean, off the highs by quite a bit. Almost, 200 points off the highs on the Nifty from where we started in the morning. All right, I think we're going to wrap up on this edition of Closing Bell. From all of us here, it's goodbye. Thank you very much for staying with us. Markets Forward will do a recap of course, what happened during the day. And, of course, the big GST-related sector-wise implications with our research team. Stay with us.